Johannesburg, 1917. A young diamond buyer named Ernest Oppenheimer raises money from London and New York to launch Anglo-American, a mining finance vehicle that will soon reach for gold, coal, and the crown jewel, De Beers. For nearly a century, the Oppenheimer name will sit atop a system that can steady or sway diamond prices worldwide, shape politics at home, and fund a sprawling web of influence from conservation to think tanks. This is the story of how one family built a diamond gold complex, why they sold it, and how their power persists after the mines. The core idea is simple but radical: control scarcity. Ernest arrived in South Africa as a teenage broker and learned quickly that diamonds are not valuable because they are impossible to find. They are valuable because the market believes they are rare. In 1917, backed by British and American financiers, he formed Anglo-American with the explicit aim of building a flexible platform able to buy, consolidate, and reorganize assets across commodities. Within 2 years, Anglo was buying diamond properties in Southwest Africa, brushing up against De Beers, the empire originally shaped by Cecil Rhodes. Ernest then used Anglo as a lever, accumulating stock and allies inside De Beers, until in 1926 Anglo became its largest shareholder, and in 1929 Ernest became chairman. Control for Ernest did not simply mean ownership, it meant managing the entire life of a stone: extraction, aggregation, pricing, and persuasion. He treated diamonds like a managed currency. Rough could be stockpiled in fat years and dribbled out in lean ones. Sales could be staged. Prices could be guided. The aim was to turn geology's lumpiness into a smooth, predictable cash flow, an annuity paid not by nature, but by choreography. That choreography was the centralized sales system, perfected over decades. De Beers aggregated rough from its own mines and from partner producers into a stockpile, then sold parcels at tightly choreographed events called sites. A small, vetted club of site holders received pre-assembled boxes of stones on a take-it-or-leave-it basis. There was mystique and there was discipline. Prices were suggested, volumes flexed with the cycle. If demand faltered, stockpiles absorbed the shock. If demand surged, controlled releases kept the story of rarity intact. Governments were not passive. Producer countries, especially Botswana via Debswana, its joint venture with De Beers, bargained for revenue, beneficiation, and control. But for most of the 20th century, the Oppenheimer-era De Beers aligned geology, logistics, and psychology so that scarcity could be produced on schedule. Back in Johannesburg and London, the financial architecture around the family matured. Anglo-American became a machine for capital allocation, spilling beyond diamonds into gold, coal, paper, base metals, and finance. After Ernest's death, Harry Oppenheimer took the reins and made the system bigger and more politically sophisticated. He cultivated the image of a modernizing businessman. Briefly a member of parliament with the United Party, a donor to universities, and a public advocate for gradual reform, especially around trade union rights and training for black workers. At the same time, he was a disciplined strategist, pruning businesses, acquiring others, and defending the group through commodity cycles and political storms. Here, the story acquires its central tension. Harry publicly opposed parts of apartheid policy and funded liberal causes, yet the corporate system he led was woven through the apartheid economy, benefiting from labor controls, pass laws, and state-structured markets. Anglo and De Beers did not design apartheid, but their scale meant that compliance, however reluctant, however reformist, helped sustain it. Historians argue over the net effect of Harry's positioning: meaningful openings for unionization and dissent, or managerial pragmatism that left the deeper power relations largely intact. Either way, by the 1980s, despite sanctions abroad and unrest at home, the Oppenheimer companies were still indispensable to South Africa's economy and to many of its trading partners. The diamond system itself evolved. Marketing built the myth: a diamond is forever, while the sales mechanism built the market. Stockpiles smoothed shocks. Sightholder discipline policed the downstream. Long-term contracts stabilized the upstream. Competitors appeared, antitrust scrutiny thickened, and producer nations demanded more. Yet the essence remained: scarcity as a service. It was market-making rather than price-taking, a private answer to a commodity that would otherwise behave like a roller coaster. Then the family did something only great dynasties manage. They chose their exit. In 2011-2012, Anglo-American agreed to buy the Oppenheimer family's 40% stake in De Beers for $5.1 billion in cash, raising Anglo's holding to 85% and leaving Botswana with 15%. For the first time in roughly 80 years, the family ceded operating control of the diamond business that had defined its name. Why sell? Several currents converged. Producer nations, especially Botswana, had greater leverage and wanted more of the value chain moved onshore. Antitrust and regulatory scrutiny made the old central selling model harder to defend. The family's stake was highly concentrated and relatively illiquid in personal terms, crystallizing it into cash, diversified both risk and opportunity. And inside Anglo, consolidation logic favored a simpler ownership structure. The sale ended a corporate dynasty, but on the family's terms. It was not exile, it was reallocation. By stepping away from the machinery of diamond pricing, the Oppenheimers freed themselves to act like investors rather than operators, carrying their networks and reputation into a new era. The pivot was already prepared. In 2011, alongside Singapore's Temasek, they launched Tana Africa Capital, targeting consumer goods, agribusiness, retail and education across more than 20 African markets. The bet was that demographics and urbanization would compound returns better than ore grades. Through E. Oppenheimer & Son, they broadened into private equity positions, aviation through Fireblade, and a portfolio of conservation-linked assets. Conservation, for the family, became both responsibility and identity. Tswalu Kalahari, South Africa's largest private reserve, is a landscape-scale project that stitches ecological restoration to research and careful tourism. The Diamond Route network links former mining properties to conservation and heritage, turning industrial footprints into ecological assets. These efforts are not beyond critique. Some argue that elite conservation can entrench land inequalities or launder corporate legacies green. Others counter that private reserves and philanthropy fund biodiversity and science at a scale the state struggles to match. Either way, influence now runs as much through policy papers, convenings, and conserved hectares as through headframes and stockpiles. Soft power also meant ideas. The Brenthurst Foundation, launched in 2004 with strong Oppenheimer backing, positioned itself as a pan-African policy shop, advising on growth strategies, security and state capacity. It convened politicians, economists and military leaders and published on matters from industrial policy to peace operations. In recent years, The family signaled changes to how this policy work would be organized. Whatever the vehicle, the broader strategy is clear. Convert a century of corporate capital into networks of expertise and access that outlast any mine. Are they South Africa's richest family? In many years, yes, or very close. Rich lists fluctuate with share prices, exchange rates, and methodology. Johann Rupert, whose fortune is tied to Richemont and Remgro, periodically leads depending on luxury and currency cycles. In other years, Nicky Oppenheimer and family occupy the top slot. The details matter less than the pattern. The Oppenheimer fortune is now diversified and largely private, making precise valuation difficult but ensuring durability. The name remains a shorthand for dynastic wealth in South Africa, an emblem in debates about inequality, corporate power, and the responsibilities of the ultra-rich. What, then, endures? First, the Oppenheimers built a mining finance platform, Anglo-American, that gave them the leverage to take De Beers. Second, they engineered a managed diamond market in which scarcity could be created and cash flows smoothed, an industrial ballet performed with stockpiles, contracts, and carefully staged sales. Third, they chose their moment to exit, converting operating control into liquid capital and a portfolio of influence that now runs through investment vehicles, policy networks, and conservation landscapes. The family's history is not a fable with heroes and villains. It is a case study in how wealth is constructed, institutionalized, and redeployed across generations. It also carries a warning. The diamond system succeeded because it joined finance to narrative and contract to coercion. It relied on disciplined suppliers, credulous consumers, and, at times, political arrangements that constrained labor and competition. When that architecture came under pressure from producer states, regulators, and rivals, the family recognized that control is only one form of power and not always the smartest one. Capital that can move, ideas that can convene, and land that can heal all outlast a right to sell rough stones. If you want to understand the Oppenheimers' influence today, don't look only at a mine plan or a rich list. Look at how they turned a commodity into a system, then turned a system into a set of institutions that survive without the commodity. The mines were a means. The enduring asset is the know-how of control, consolidation, and conversion. That is how a surname became, for a century, a kind of currency, and why, even after the sale of De Beers, it still buys a seat at almost any table in Africa.